Hello everybody, Steve Griffiths here, developer of the MTPredictor software program. Today I'd like to look at a different market than I normally look at. In this case this is crude oil on a 5-minute chart, and I want to look at this particular setup here because it was something we were discussing and talking about in yesterday's MTPredictor trading room. First of all, let's go through these setups here and see how they unfolded. Well, first of all, there was a history triangle here. If we look at this, the STF was red, so it's a perfectly valid MTPredictor trade setup. So we put the analysis on. As normal, we get the number of contracts. This is our position sizing, profit target, etc., etc. Market came down and would have taken you in for a short trade. However, the next bar, it went up and would have stopped you out for a losing trade. And this is important because every single trader must know and understand that losses can and do unfold. This is simply a part of trading. But what we do here at MTPredictor is we keep these losses small. In fact, we use position sizing to do this. In other words, when we have a loss, we refer to that as a -1R loss, and you'll see why I'm talking about R's or risk units in a little while. So in other words, we vary the number of lots, contracts of shares to keep our initial risk small under control. In this example, less than 2% of a sample $20,000 account. So market moves forward and another TS4 sell setup appears. There we go, there's another attempt. Again, STF is black, so it's a perfectly valid standard MTPredictor trade setup for new MTPredictor customers. Let's put the analysis on. Again, the position sizing gives us this time 6 contracts again. We move forward, the market now takes us into a new short trade. As we step forward, this time crude oil is doing what we anticipate and starting to decline nicely. Past the 100% initial risk level quite nicely. Market carries on down. We then reach the first profit target, which in this case is the decision point target down here. At this level, the profit would be approximately 5 times the initial risk. In other words, what we talk about 5R, in other words 5 risk units. So remember, we lost 1 risk unit back here. Can you see how having a strategy where the profits are larger than the losses, in this case 5 times larger, even though you have 1 loss and 1 profit, it gets you on a solid footing for long-term success because the profits are large and the initial risks or the losses when they come through are small. So what do the standard trade management guidelines tell us here? Well, because we've reached the first target, we come down and look at our STF down here, which is our trend indicator, but it also has these grey bands on, which are what we call our strength bands. So if the STF is beyond the strength band, which it is here, we consider this market to be strong, therefore it's going to carry on in this anticipated direction a bit further. We therefore swap to our ATR stops, which is our red dots here, to manage the trade. As you can see, the red dots follow the trade down or follow the market down, 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 and then at this point in time here you would have been stopped out. So let's have a look what the profit would have been at this level. And as you can see, this allowed you to increase your profit from what was 5R at the first target to something slightly larger, which is plus 6.5R. So the result for this trade for standard MTPredictor users would have been a -1R loss followed by a plus 6.5R profit, and that was very good indeed. However, what I want to do is I want to go back a bit and look at the market as it was coming down here to see how more advanced MTPredictors can use the more advanced tools in the software to help manage your trade even more successfully. And this is where our Elliott wave tools come in, and I talked a lot about how we do Elliott wave in isolation in the trading room yesterday, and as such is the unique way we use the Elliott wave routines in MTPredictor. So as the market came down here, if I right mouse click and I do Elliott wave minor in this case, can you see here how this decline unfolded as a lovely 1, 2, 3, 4, 5. This was found by the software, and actually the low down here was pretty much at the maximum wave 5 WPT, which is our coloured zone here. So this gave an indication that this move was actually ending, and as we can see, this is where the crude oil then started to trade back up again. So how could you manage your trade with this? Well, knowing that this is a Elliott wave pattern that's unfolding as it's coming down here, and you can do this by, if I clear the chart off, if I come back to this point here and I do Elliott wave minor, you can see that at this point in time it would give you 1, 2, 3, 4, 5. So now we need to know in advance areas where this fifth wave decline is most likely to unfold, and for this we can use our WPT tool, in other words wave price targets, and use a down wave 5. This requires 5 clicks, 1, 2, 3, 4, 5, and here these WPT targets are now placed on the chart for you. The pink zone or the magenta zone is the typical wave 5 WPT. And why is that important? Because you know that if the market gets down into this zone, which it did here, and the market's unfolding in what looks to be a 5-wave sequence, this is the most likely area where this 5-wave sequence is likely to end. So what can you do for this particular trade? Well, knowing this, you can actually say, right, I know I'm short now, but what I want to do is once I get into this zone, I want to simply trail my stop 1 tick above the prior bar highs. And this is where our trade module comes in, because we have the ability to swap to what we call bar or bar trailing. In other words, if you use the MTPredictor trade module to initiate your trade and manage your trade, when you get to this level, just click, or as you're coming down here, you click to this bar trail mode, and this is what the trade module will do for you. It will move your stop and at the bar highs each time a new bar is complete. So what does this mean? Well, if we move forward a bar, it means you would have been stopped out here for, in this case, a plus 9R profit. So can you see how suddenly by using your knowledge of Elliott wave and using the tools in the MTPredictor software allowed you to uncover this 5-wave decline, allowed you to project this level in advance to prepare you to adjust your trade management strategies to increase your profit on the trade. Now, anyone who wants to take a plus 9R profit should be very pleased with themselves, and as such, even if the market carried on down lower here, it wouldn't matter, because a plus 9R profit is absolutely huge. As you can see, this turned an initial risk of approximately $360 into a profit of over $3,200, so a very, very good result indeed. But I thought this was a good video to do because we were talking about it in the training webinar yesterday, in that not only was this a good example of a standard MTPredictor trade management or a standard MTPredictor trade and how we could have managed it using the standard trade guidelines that swap into the ATR stop, it was also a good example of how we could actually use the Elliott wave routines in the MTPredictor software and the manual risk reward to help manage your trade more aggressively, knowing that a good Elliott wave pattern was actually unfolding in the crude oil market as it was declining down this particular swing here. So a good example here for both standard MTPredictor traders and also the more advanced MTPredictor users among you as well.